Hello everybody. Yes, today is 27th of February 2019 and I'm going to take you through how to trade breakouts. So this webinar we did, part of this webinar we did previously, we already discussed what breakout is, how to trade them, part of them, but then I want to add something which I didn't say during the first webinar. So this is the sequence, this is how we are going to move on in this webinar. The very first thing you're going to do, you're going to just look at some slight introduction to breakouts. Then we're going to look at what is breakout, then characteristic of the breakout formation. Then we're going to look at a bullish breakout, then bearish breakout, and then we're going to look at how to trade a breakout formation. So these are just the simple four things that we're going to look at. We may look at other things like trend, indicators, and genuine breakouts and other things, but that is as we proceed. So we move to the next, we want to move to the main chart. Let's go to the main chart. We see what we have. We just move straight away to the main chart. We are loaded already. So if I remember, just a small recap of what we looked at. This is what we said breakout is. This is the real chart. We're going to remove everything clean on this chart first of all before we proceed. Like that. Then I'm going to leave it like that. So you can remember that I said that breakout is when price consolidates a level and then it goes above it with a big candle. So assuming this is your level, you have a level like this as a good resistance. Like this, we mark it black. Assuming this is just some resistance you have on a chart. Then every time price leaves the lower side, it heads towards it, but does not break above it. Something like this. Assuming you notice that the price goes to a level, then it bounces from that level to the other side. It comes back again to the same level, but does not do anything. Then it comes back to the same level, but does not do anything. So basically, the place where the price is bouncing from, this is a very good resistance and a sell place. This was a very good resistance and a very good sell place, and then this was a very good resistance and a very good sell place. So the case where assuming price leaves the lower end and comes and closes above 1.3176 in this case, then this act of moving from this point to the upper side is what is called a breakout. The act of price moving from the lower side and closing above and then being able to sustain that breakout. By that I mean as long as the price now remains above it, then this was a genuine breakout. Opening below and then it close above, we have a breakout. So the best as a trader, you need not, once you notice that this place is holding, then the price goes above it, you don't find yourself buying when the price is somewhere here. Rather, you should wait for price to come back down up to the support, then wait for some consistency, some sustenance. The price needs to remain above that level like this, like that, so that we can pick a buy to the upper side. So this is being recorded, which means that if you maybe my voice goes down or my visual goes down, then you still be able to find it on YouTube. So you should not be worried. Assuming my audio goes down now, then you can still be able to find this on YouTube. So this is what I mean by breakout. You find a resistance, price goes down, a resistance comes back to the same level, down, back to the same level, then we see price ascending from this point up to that point. So normally a genuine breakout does not happen in peanuts. Like you will not find small candles here, you will not find something like this, you will not find this level being broken by small candles. That was one candle. Something like this is highly unlikely. That the price goes up, you find it's going up maybe in peanuts. Normally a genuine breakout does not happen like this. It does not happen in beats. You'll find that it happens with one big candle. That is, this candle, if this is to be a breakout, it has to open there and then it closes above. One big candle opening below and then closing above everything. This is what's called a breakout. So in case you see this in a chart that price was below a level, then it breaks above it with a big candle, something like this, and then it remains above, then that's a genuine breakout. You ought to wait for price to come back down, wait for price to retrace back. In this case, we've seen that as a breakout like this. Price has gone up, then there's a big breakout to the upper side. You want to wait for price to retrace back down, then you want to see this sustainers. You want to see price remaining above the same level for some time before you eventually pick a buy. So whichever candle you choose to trade, maybe you are somebody who does pin bar, engulfing candles, or maybe inside bars, all those candles needs to appear along the line which is being broken. So we have this level here. You can see that the first time the price retraced to the same level, we had a support. The second time we had a very good support. Then the third time we had a support. So if, assuming you do pin bar or maybe engulfing candles, then you're supposed to wait for those formations around these levels. Don't find yourself buying here. This is being greedy. And another thing, don't find yourself taking profits while at this level, that you buy at that point then you take profit at that point. No, that should not be the case. You should wait for price to move up until it gives you an opposite signal. So we can see a break, a retracement, a support. You don't buy the first one, then price proceeds up slightly, then it comes down. This is a very good place to buy from, and then you have the next one, which is a very also good place to buy from. So we basically have two places. We have this and this, despite the fact that the price actually came back the same place 3 times. So this is one thing most people don't consider. They see this as a breakout and therefore you're supposed to buy wherever price is up here. That should not be the case. Rather, wait for a retracement. You should pick a buy from that point. Not the second time the price retraces back to the same place, and the third time. So the main reason I'm having these 3 lines here, I'm having this as a resistance, I'm having this as a resistance. This is like a triple top being broken. The main reason I'm having these ones is not because it's not that the price has to come back to this line 3 times so that this becomes a resistance. This is just like an example. It shows that the price may come back to a level 3 times. Sometimes it may come 2 times, like that, and sometimes it may come even once. So you cannot say that this is that in case it has to be 3 times, then when price goes above, that's the breakout. No, sometimes it may just be one resistance, then price clearly rises above it. The other side of the equation, this side remains the same. This is still a breakout. So you need to wait for a buy, and expect price to move even upwards. This is one thing most people don't look at when they're considering breakouts. They don't look at it in this light, that resistance doesn't have to be like this. It doesn't have to be 3. Sometimes they can be 1, just 1, and sometimes we can see 2, like this. Like this. Just a second, I have this bolded like that. Sometimes you can see that you can have 2, and sometimes you can have 3. So this is relative. It doesn't mean that if the price is coming to a level 1 times, then if that level is breaking, then that's not a breakout. No, that can be a breakout. Sometimes the resistance could have been used 2 times, sometimes even more number of times. You can find that the price has been there severally. This is still a good place. It still means another thing. Anytime you find that price has used the same level as a resistance severally, you'll find that there are a lot of tails on top, tails, but there is no candle body that is closing above. The day that one candle body closes above that place, then that's a genuine breakout. You ought to look for a buy, and you don't look for a buy immediately. Wait for price to retrace, then when it comes back the second time, you should pick a buy, and the third time you should also pick a very good buy. So that's from the bullish point of view. Let's look at the bearish side. We see how do we trade. How does a bearish breakout look like? So the same principle, the one I applied on the bullish side, is just the same one that I'm going to apply on the bearish side. To remove the period separators. That chart is clear. So assuming you have a support, this is just a support. You have some line which you've drawn, a horizontal line you have on your line on your chart, and then you consider this as a very good support. So price comes back to this level but does not close below it. It comes to that support. Just a second. You find price coming back to that support, then instead it heads straight back up. Then it comes back to the same support but does not do anything. Instead it reverses back to the upper side. Then price goes back to the same support but does not do anything. Instead it breaks above. So there is one thing you need to observe around this level, that the bodies of the candles that actually appear here must not be closing below 1.1521. You'll find that around this level there are going to be a lot of tails, a lot of tails, a lot of tails. And the next one also the same thing should be true. Then the next one the same thing should be true. Then the moment that price closes below 1.1521, then this is called a breakout. This is now a bearish breakout. It means that the price is continuing to the lower side. So as I said, from the bullish side, this does not happen with one candle. You'll not find, it does not happen in peanuts. Like you'll not find small candles going down and then you'll not find something like this. You'll not find candles moving down in peanuts like this. That was a candle. Then you find the next one has gone down just the same way. You'll never find something like this. You'll never find anything like this. Then it goes down maybe in peanuts like this. This normally does not happen in case of a breakout. Rather, you'll find one big candle that opened above everything. You'll find something like this. A candle which opened above and has gone straight to the lower side. This is what we call a breakout. So you need to know that from today, that a breakout is actually when the price has opened above everything that we are seeing above a key level and then has closed below. This is a bearish breakout. What it means is that as long as the price now remains below 1.1521, we actually expect it to proceed even lower. So I hope this should make some sense, that when you see something like this, you had your level very well. Probably you are waiting to buy when the price was here. Then it opens above and then closes below with one red candle. Then that's a genuine breakout. So to confirm that this is actually upwards, downwards, you don't need to sell here. Wait for price to retrace back for the first time. Then this time you don't do anything. Wait for price to go down. Then in case it comes back the second time, then this should be the correct place to sell from. Wait for a very good sell the second time and the subsequent ones. Like if you don't sell it the second time it comes back like that, you may also want to wait for it the third time it comes back to the same place so that you can pick a sell. So I hope this should make some little sense, that the same principle we were applying on breakouts on the bullish side is the same one we are now using on the bearish side. It's just that we are now heading downwards. On the bullish side we are heading upwards like this. This one we are heading upwards, and then in this case we are now heading to the lower side. So notice one thing, that I'm recommending a sell when the price is there, along the same line where we were selling previously. I'm recommending a sell when the price is here and not when the price is on this side. Whoever comes and enters here that, oh, this is a breakout, this thing is leaving us, this is out of greed, you need to wait for price to come back to the same level. Then for the first time you don't do anything. This one I'll mark a red on it. You don't do anything. Then when the price goes down, while it's progressing to the lower side, you can literally see that the price is going downwards. Don't be in a rush to sell it. you should wait for price to retrace back up to the same place so that you can pick a sell from that point. And another thing, somebody is asking me where my stop loss should be at. The correct place to place the stop loss is above the candle which triggered the break. So this is the best place. You are supposed to, if you successfully manage to sell it around this point, your stop loss should be above this candle which actually triggered the breakout. So another way to place the stop loss is if you can find a retracement while the price is going down, maybe from top, then you can find a retracement. You can place that stop loss above that retracement, the end of that retracement. So this is just one way to get it right. You want to place a stop loss maybe above this candle that closed above, or you may want to close above another retracement which you can see on the same chart, especially where the price is going to the lower side. So assuming you do like this, you successfully pick a sell at this point, don't find yourself taking profits here, that because you sold, this one went down and it bounced from this point, you sell from this point, then you take profits. No, actually the break below this point should be a confirmation that we are still heading to the lower side. So you're likely to see something like this, that the price after breaking below, it may retrace back up slightly, then we'll see a steep move even further to the lower side. Something like this is likely. So just the same concept I was using here, support, being broken, is the same concept here. A support, being broken, a very good sell place. So this is one thing you need to take care of. If you sell here successfully, wait for price to go down, you should come back, then you wait for it to sell at that point. So the cases I've looked at so far are just examples where price is this horizontal level which is being used as a good place, but there are also other breakouts which I want to explain before I move to the real chart. We'll get rid of this grid, then also get rid of line, then we'll also get rid of ask line. Ask line is basically the ask price. Somebody may be wondering, ask price is the price where if you trigger this buy here, assuming you want to buy, if I buy this at demo account, if I buy, ask price is the price where you buy at. So we move straight to what we are looking at today. We don't want to meddle so much into that because we're not focused. Our goal for today is breakout, not that. So I have my line there. I have this a very clean surface. Other breakout happens like this. You'll find a trend line which has been holding. Price has been using it consecutively. It's a very good place. So somehow from the lower side, price comes back up to that resistance, but does not do anything. It bounces from it like that, then it heads down, comes back again to the same level, then it heads down, then it comes back again to the same level, then it heads down. So this is another way. This is one other way that you can. This is like a horizontal resistance. So the same thing applies. The moment that price breaks above this level, like that, the first time you find that the price above this level, you don't do anything. Wait for price to try developing some base after breakout. Wait for something like this. Wait for maybe some little consolidation. The price may at times come back to that trend line like that. Wait for something like this. Wait for price to try holding itself below that, above this breakout. So what you do is simple. When the price gets back to this level, you're supposed to pick a buy. So normally it does not happen like this, the way exactly the way I've done it. It may be just one retracement. Sometimes it can be two, sometimes it can be three. But ensure you get a base after the breakout. This is the breakout. Ensure you get a very good. This is the breakout. This is what there has to be like one big candle that opens below and close above. And I'm going to put a candle there instead of a line. this. This is a very good breakout. If you can find something like this on a real chart, then that's going to be even better. Something like this. So you can see from the lower side that the price actually opened from somewhere below there and closed above everything. That is the definition of a breakout. Anytime you find that the price was below as a particular level which is significant, and then it closes above it while you are seeing, then that is a genuine breakout. So such a thing, something like this, price opens here and closes above everything while the previous one was actually being contained, then this is a breakout. But don't buy immediately the first time you find that the price has closed above. Wait for price to retrace and try holding above 1.3127 in this case. Wait for price to remain there before you can actually pick a buy from these levels. Have levels there, also have levels here. So if you can successfully buy it there, the correct places to take profit is when price was touching this trend line, which it just went above. These are the correct places to take profit from. You want to take profit there, you also want to take profits there, and you may also want to take profit at the very top, which is there. So this is one very clean chart. Notice these are resistance. These are resistance. Just a second, we have this drawn clearly. These are resistance. We also have another very good resistance there. Then you also have another very good resistance at this point. So in case you buy from this point after this breakout, then these retracements, then you're supposed to take profits there. Wait for price to clearly rise above, then retrace before you can pick a buy even higher, something like this. Then in case price comes back again, maybe after that break, you're supposed to pick a buy. So basically, these are the places you're supposed to buy from. You need to buy from that point, buy from that point, and also buy from this point. So I'm not saying that anytime there's a trend line, then price goes above it, price has to continue upwards automatically. No, this is just like a forecast. Normally it tends to behave like this. So this should make some little sense that in case the price goes above a level and you can witness that, then don't buy immediately the price breaks above. You should wait for price to retrace and maybe hold above that trend line, pick a buy, a second buy, third one, and the third one you should go up to the very top, which is this resistance. So this is a case where we have a level being used, a resistance level being used, being broken, then price retraces back to it. Let us look at an opposite of this one. And just like this, we have that. I'm going to clear this chart clean so that we are able to use it. Remove line, and also going to remove ask line. Go to line chart. So we have our level there. Assuming you have something like this, that you have a level like that, then anytime price comes back to that level, it bounces back to the upper side. Something like that. Anytime you find price approaching this black line, the one I'm having, it actually goes straight back up. Then it comes back again to the same place, and then it heads straight back up. Then it comes back to the same level, and then it heads straight back to the upper side. What this means is this is actually a support, just that it is diagonal in nature. It's not one straight line, it's diagonal. It's one straight line diagonally. Support, a support. The moment what you want to happen now is for price to either come back to that level, then head straight up, or it breaks below. And in case it breaks below like this, don't find yourself selling immediately. Wait for price to show some sustenance. Like it needs to remain below this level for some times. Need to see this consolidation. Wait for price to try consolidating somehow, like that. Then find a resistance, a minor resistance, where if anytime it goes above, it holds. Then you need to pick a sell from that point. Then these lines I'm having on my line, on my chart, these ones, these are the correct places to take profit from. The moment when the price was actually touching that trend line when we were heading upwards. So if you successfully sell it here, or maybe you sell it the second one there, then the best you should be doing is to wait for price to descend, sell it, the first stop price should be there, then a retracement before you pick another sell, continue down, you should wait for a retracement before you pick another sell, like that, then we should continue to the lower side. So this is one good way. This is just one very good way of trading. Breakouts don't normally happen as horizontal normally. They also happen diagonally. You can find a key level which you think is going to hold indefinitely, but then the price breaks up below it. So even this one has to happen with one big candle. You have to see one main candle opening above and then closing below everything. That's the definition of a breakout. Something like this. So anytime you have a level and then the price tends to use it, continue as a support. We have this as a support, the next one as a very good support, then the next one as a very good support, then there's a break below, and then price comes back to it, then this should be the correct place to sell from. And don't sell the first retracement, as we mentioned with the horizontal case. When the price breaks below level, the moment it retraces back up the first time, don't do anything. Wait for price to remain below. Wait for it to consolidate for some times before you eventually pick that sell. So the second one and the subsequent ones are the best one for a sell. We move to the real chart. We want to see whatever is happening now. So this is a 15-minute chart. I'm going to use this for illustration's sake only. The same thing applies even on a real chart. If you are to do main chart now, this is what you to expect. We have this level here. So just look at it like this. You can see from the past that there's no clear memory of a resistance, but it was used somehow while price was here. Then there's a breakout. This candle here, the green one which opened here and closed above, is actually what's called a breakout. So wait for price to proceed up. Then the moment it comes back to the same place, then you should be able to buy at this point. This is what is called a breakout. Price breaks above, then the move from this point to this point is actually a retracement before we head upwards. So you'll find some shapes forming in between. You may find flag, whichever wedge forming in between, but the most important thing is to buy while the price is at this resistance, at this level. There's also another one on top here. We have a resistance. We now pick a zone, a resistance. There's a clear break above. Price has retraced for the first time. We want price to proceed up. Then if it can come back the second time, then we are going to consider a very good buy. So another thing, just before I proceed, assuming my screen get frozen, like my screen freezes while I'm saying this, don't worry, this webinar is being recorded. It's going to be available on YouTube. So you will just need to check the bottom under the description of this video. You'll be able to find it. We proceed. There's a break above, first retracement, then the second one is the best one. This is where we should pick a buy. So I hope that should make some sense. There's also another very good one here. So this is just a support being broken, being used as a very good resistance. You need to know that the price is upward. So the only thing I've not mentioned here is that as much as breakout is a good one, ensure that before you trade a bearish breakout, before you sell at this point, just ensure that the overall trend on this chart was downwards. So you use indicators for this one. You may want to find trend based on indicators. Use indicators, use moving averages, use these ones. These are all the indicators you can use for this one. You can add this, you can add this, you can add this, you can add all this. Then use them to get the overall trend. Before you sell a breakout like this one, ensure that the overall trend on that particular chart is downwards. And before you buy this one, when the price is going up, ensure that the overall trend in this case is upwards. Like in the case that I'm looking at here, just look at this like this. We have a level that's holding. Just a second, I get this to have a good appearance. That. Then I'm going to remove period separators. First, that. Sorry, still on the chart. Period separators. Then the next one, no, that's fine. So as you can see on this one, from this point is the swing low, up to this point the overall trend has been upwards. We've been heading even higher, and even if I was to add an indicator on this one, maybe a moving average, you can see that this moving average at this particular time, it was showing us a buy. It was upwards. So once you've known that the trend is upwards, that's the moment to focus on bullish breakouts. You can see very well where I'm have highlighted here a resistance. We also have a very good resistance there. Then price has gone above support. We have now a support, another good support there. Then we have the last time that the price came back to the same place but could not do anything. Instead, it remained above. So basically, this candle, the one you're seeing that opened here and closed above, is this green candle here, which I was saying is the same candle that broke from the lower side from this point and then closed above. The same thing here. It opened below and then it closed above. Then it retraced for the first time. We did not do anything. As we've mentioned, the first retracement is not always the best one to be traded. So we don't trade that one. We leave this loose. We don't do anything. Then the price comes back the second time. It's the best time to trade it. Then the third time is even the best one. So these two after the first one are always the best one after the breakout. So notice, you pick a sell, a buy from that point, your stop loss should be below the candle which triggered this breakout. The one that made price to actually close above, that's where your stop loss should be at. So another view, just look at this like this. We have a level there. We also have a level there. Then I want to drag this one down like that. And then I'm going to mark that with a tick. I'm also going to mark that with a tick. So here, if I leave the upper side, the one which I was just looking at, you can see that from the past, the same place has been used as a very good support. Just look at it properly. The same place has been holding for like the entire day on a 15-minute chart. The same place from 19th of October. We had a support, a support, a support, a support. Then price went below it. There was the first retracement. It went down. Then the second retracement. So this was the correct place to sell from. After the breakout, you sell the second retracement. That's the best time to sell. The second retracement and the subsequent ones are the best ones. So that means I also could have sold at this point. I could have sold at that point, but then it went wrong. Like it hit my stop loss by going above. So I could have entered that one, go down. Maybe I take profit at the tip after this reversal sign, this pin bar. Then my stop loss is supposed to be there. Even the second one, this one where I sold there, my stop loss has to be above the candle which triggered the breakout. If not here, then it has to be above the first retracement. Price goes down, we find a retracement. It goes down, a retracement. It goes down, a second retracement. So you sell at that point. Your stop loss has to be here or at the very top of this retracement. So I hope that should make some sense now. We should be making a very good progress as we speak. I've now looked at exactly like cases where support is being broken, being used as a sell place, resistance being broken, being used as buy places. So we check also the examples. Let's minimize this. is a level here. This is just a very good trend line, but it's not a very good one, so I don't want to force that. We just leave it at that. There's another example here. So normally the way I draw support and resistance, I don't draw one line as a support and another line as a resistance. I'd pick a zone. So something like this, I will pick a very good zone. I don't draw support and resistance as one line. Rather, I pick a zone. In this case, you can see from the past we had the entire place being a support, a support, a support. Then there was a break, though not a very good one. Price went up, it came down, back to the same place, and now we are holding. So these are the places to sell from. Sell the second retracement, not the first one. So let us look at one case where price is using there's a diagonal level which is being used by price severally. I saw a very good one on Brent oil, sorry, on silver weekly. So look at this chart like this. Assuming I pick a line from that point and extend it downwards like that, you can see the same place was being used as a resistance, the same trend line, that is same resistance. We also have a very good resistance there, and then you also have a very good resistance there, then you also have a very good resistance at this point. Then as we speak now, the same place is being used as a very good resistance. So there's only one thing here. Based on the pin bars we are seeing a lot of tails here. Price is likely heading downwards. Based on this, you can see these candles have some extended tails. They may mean that the price is heading downwards. We also have that, an extended tail. We also have this as an extended tail. So if, for example, the price does not go down, instead it breaks above, assuming something like that happens, then you wake up one morning, instead of the price going down, you find that it has closed above this trend line. Then what you want to see is for price to remain above. Let price hold on, try playing above this trend line. Then while it's playing, establish a level, a support, which likely in this case should be this. Establish a very good support. Then that support is where you're supposed to pick a trade from. And in case you buy at that point, you don't exit anything. Wait and exit while the price was touching that level. You can also wait and sell there. You can also wait and sell there. And you can also wait and sell at the very top. These are the levels to trade from. Trade from either 18.61, 18.02, 17.48, 16.92, and then the entries here. So in case you buy from this point, from the lower end, you're supposed to have the courage to remain up to the very top. So this is not to say that every time the price breaks above a trend line, it actually remains above. Some cases the price may break above and then break again below. So if that's the case, then the one that actually broke above was a false break. So you're supposed to look for a sell. I hope this should make some sense. It should make some sense. I hope this should make some very good sense as at now. That whatever you're seeing, if this is showing us a very good sell, assuming one candle open below and then closes above, then that sell is probably faulted. So the idea is not to buy when the price has just broken above, but to wait for price to hold above that trend line so that you can pick a confirmed buy. So this should pretty much bring us to the end of today's webinar. So far we've looked at just everything you wanted to look at. We've looked at a bearish breakout. We've also looked at a bullish breakout, which we've explained already. Then we've also looked at a diagonal resistance which is being broken. This is also a bullish breakout, another name. Then we also looked at this one, which is a bearish breakout. Despite the fact that this is a diagonal one, this is still a bearish breakout. Then we've looked at an example where price is using the same level as a support and then it breaks it, then it used that as a sell place. We've also looked at the opposite of that. Then we've looked at just one example where price breaks above a diagonal level and then it uses it as a resistance. So this is what we expect in the future. I've not looked at a real example because I've not been able to go through like the entire chart to find that good one, but if I find it, rest assured it's going to be on the description with a link below. So thank you very much. If you didn't look at this, assuming you did not listen to this properly, or maybe you're not able to hear my voice, or maybe my screen was so frozen, or maybe something like that, then you'll still be able to get this webinar on YouTube. So just check on the description. There's a link under the description. I have the link where the webinar has been recorded, and it's very clear. So thank you very much. See you again tomorrow at 8:30 GMT, 7:30 sorry, GMT.